Good afternoon, everybody. It is January 6th. Happy 2022. We have made it through 2021. We are embarking on a new year, so welcome everyone to this new year. I'm sitting here in my car. I promised my son I would pick him up from school today, and so that's the different backdrop for you, not driving, just sitting here parked. But I wanted to share some thoughts with you. Question we're getting now is, what do you expect for 2022? Prognosticating or trying to have a crystal ball on with the financial markets as far as they are concerned is always a risky business. Case in point, if you had asked me this same question 2 years ago in January of 2020, a global pandemic was nowhere on my radar. So the world and events can often throw curveballs at you that you don't expect. But with that note, I'll try to give you some things that I think are headwinds moving forward, some things that I think are tailwinds. Let's first talk about the headwinds. Obviously, inflation has been a huge issue in the second half of the year. We saw inflation rates coming in at 6-7%, depending on what metrics we're using. Some are saying 12-13%. The inflation is definitely real. The bond market is still not basically pricing that in. The 10-year Treasury, as I speak this, is still about 1.7%, which means one of two things. Either the bond market's wrong and bond yields are going to increase, or the short term, or the inflation is transitory, it is short term, and you'll see inflation come down. I think the truth is somewhere in the middle. I do think we're going to see yields go up. I think it would be healthy for the economy if yields did increase, and I also do think you're going to see some of this inflation subside. Why do I think the inflation is going to subside? Well, first of all, the absolute flamethrower of cash that central banks and central governments have blown into the system in the last couple of years is probably going to begin to come to an end. Federal Reserve was pumping about $120 billion a month through this pandemic into the system. There were extraordinary efforts beyond that. Federal Reserve's balance sheet went up about $5.5 trillion. That's $5.5 trillion that never existed before. They blew into the system. They're now saying that they're going to stop their bond buying activities and also now begin to liquidate their balance sheet. They do that. That is deflationary. Build Back Better, whether it's a good bill or bad bill, I'm not commenting on that, but it is dead. It will not happen. We might see some gridlock. We will see some gridlock in Washington, D.C., which means you're probably not going to get any major spending issues that are going to blow more cash into the system. That, again, is somewhat deflationary. I think that also there's a good tailwind now associated with that. The beginning of 2020, we had seen some potential tax changes that would have been very, very difficult for the financial markets to stomach in terms of step up in basis, really incredible increases in some of the corporate and personal income tax rates. I think that's also dead on arrival. I don't think much happens in Washington, D.C. this year. Generally speaking, that's a good thing. The markets don't like the uncertainty that comes with big policy shifts. At the most, you might see an increase in personal income tax rates. You might see some corporate tax rate increases, but again, I think they'll be minor. But these giant policy initiatives are dead. They are not. It does not look at this point like they're going to happen. That adds some stability to the markets. In terms of other tailwinds, I think, is you have enormous, in terms of stock prices, you've got enormous now efficiencies that have been built into the system. Companies, when COVID came out, they slashed as much in terms of costs and expenses as they could. They got lean, they got incredibly profitable. And they did that during a time where all of a sudden demand skyrocketed. And that really supported where asset prices are right now. A lot of those efficiencies, they still exist. It's not going to probably be up 28% year like you have for the S&P 500 this year, or up 20% for the Dow, but it'll probably look pretty good in terms of continued profitability for big U.S. companies. So I think that is a pretty good tailwind. Other tailwinds, you're going to see the labor force show back up again. That will ease some of the inflation pressures. It will also ease some of the supply chain pressures. You are seeing now goods are being offloaded faster at our major ports. They're working their way into the systems. There's still plenty of shortages. Anybody that owns a business will tell you that. But I do think as people get back into the labor force, and we still have about 3.5 million people that are not back in the labor force by, largely speaking, their own choice. They are burning through their savings. They're going to have to re-enter the labor force. That should ease some of the wage pressures. It should get things moving again pretty good. And another thing I'm going to say is a tailwind is probably the Omicron variant. We've hit a point here, and this is, again, knowing that this has been incredibly disruptive and incredibly challenging period for everybody, not just in the United States, but around the world. But now with Omicron, what we've seen is that policymakers and also people individually are recognizing that COVID is here to stay. I wish that it was not, but it is. And so this idea of zero COVID, which did result in a lot of the lockdowns, which resulted in very restrictive workplaces, which resulted in people staying home and maybe not being as efficient as they could, that's kind of over. There's really not a government on the planet that thinks zero COVID is even remotely a possibility at this point. Omicron has now come along, extremely contagious, but at least based on the data that we're seeing now, far less deadly. So what you're seeing now in combination, vaccinations, you've got natural immunity by some estimates. The United States, between those two things, is probably 95% of the population has either had COVID, had the vaccine, now had both. And is this is something that begins to fade in the backdrop? I think that the economy begins to normalize. And the more the economy begins to normalize, I think the better it is, not just for financial markets, but also for people's emotional well-being, for people's optimism and sense of hope for the future. So I think that's a real good thing. Where are some of the bright spots this year? Well, I think that those that have talked to me and listened to me over the last couple of years, I've been kind of bullish on international stocks for the last few years. That's been mostly wrong, by the way. You've made money in international stocks, and we, relatively speaking, have been underweight that. But just looking at valuations, some of these international markets are relatively inexpensive, particularly compared to the S&P 500. If we do see some dollar weakness, if we do see more robust growth return to the rest of the developed world, I think there's some pretty good opportunity there. Bonds, the long end of that yield curve, anything out past 2030 concerns me. This is a conversation I've been having with clients. A lot of the bond positions that we have on our book are several years old. They were purchased years ago at much, much higher interest rates. There's nothing I can do if I sold them even to replace that income. But when I look at the things that concern me, yeah, it's that part of the yield curve that's out 7, 8, 9, 10 years. So new bonds that we're buying, we're not looking at going out that far. But I'm watching interest rates pretty closely. I think that we're sitting here at 1.7% right now. That's a pretty key level. I'm going to be watching really closely where we go from here if rates continue to tick up. I think if they move up slowly, I think it's really good. It's healthy for the economy. It benefits the savers. But you don't want to see it happen too quickly. So those are some thoughts, at least moving forward. But kind of rambled on here. It's a little bit of a different one. But I just wanted to address some of the big questions that we're getting for 2022. And as always, if you have anything specifically you'd like me to answer, I'd love to hear from you. Shoot me an email, give me or a member of my team a call, and more than happy to talk about it. But 2022, I am very glad it's here. I'm very optimistic. What the financial markets do, we're going to find out. Our key is, I think I was watching a Disney movie. I think it was Frozen with my kids over the weekend. There's a line in there that I love. It says, what do we do now? Make the next best decision. So that's what we're going to try to do on behalf of our clients. But away from the financial markets, I'm pretty optimistic about life and everything moving forward right now. I feel like it's been an incredibly challenging in many ways couple years. And I think we are, if we're not in the 8th inning, it's late in the 7th inning with this stuff. And I think we're going to get back to normal here, hopefully sooner than later. But again, thank you all. Hope to talk to you and see you soon. Bye.